Hey guys, how's it going? So iAnthus Capital just announced earnings report on August 9th, 2021. That was on Monday, but I decided I'm gonna wait the entire week before I make a video on its earnings report. But it was a good one and they're profitable, but the stock didn't really move anywhere. I do have a position with iAnthus. It's a gambling play. I'm hoping that something happens, something good happens that will pop the stock, because I really think iAnthus Capital is very undervalued as a business or company, at least in my opinion anyways. So let's quickly look at the earnings report. They right now, they currently, as of June 30th, 2021, they have $18 million of cash. It's increased a little bit since December 31st, 2020. So in 6 months, it increased $6 million. For liabilities, they have about $164 million of debt. There's also, other debt too, like long-term debt of net insurance costs, deferred income tax, long-term proportion of lease liabilities, total liabilities of $347 million. But their revenue came in pretty good. $54 million. Cost of expenses was $23 million. Gross profit was $31 million. That means that they were profitable by almost $10 million, because the sales and general administration is only $21 million. And then depreciation and monetization, that is just a way for them for tax purposes, they just write down the property and assets, saying that they lost money, but they really didn't. And impairment losses is the same thing. It's goodwill write-downs. So these two don't count. So in theory, they made $10 million of profit. But it came out to be a loss of $7 million. Income tax expenses of 7.8. So they lost $15 million of net income loss, but in theory they actually are EBITDA positive. If a company like Aurora was to report numbers like this, I think the stock would skyrocket easily, because if Aurora went from making $10 million of profit, I think this stock would skyrocket in a big way. But iAnthus, not really. Their debt is manageable too. I mean, they could just easily, if Aurora, Tilray, all the other all the other Canadian players have access to the liquidity of the markets, and they managed to raise billions of dollars. This company is not extremely dilutive. If rich people pump their stock to the moon, they can use their capital to raise money and then pay off their debt and then move on to just continuing as a business, because I feel like this is a very, very underappreciated company. And I think that it's a good acquisition target for one of the Canadian players once US becomes federally legal. And if they can get it, if they can buy iAnthus for their current market cap of $43 million, which is absolutely nothing, that would be, everybody's gonna want a piece of iAnthus at $44 million. So, I mean, I think iAnthus is extremely undervalued. I think they can get away with selling their business for at least $500 million. But again, that's just my opinion. And again, at the end of the day, there is problems with this company, due to liquidity constraint experienced by the company did not make applicable interest payments due on its 13% senior secured convertible debenture and its 8% convertible unsecured debenture due during 2020. This is the biggest reason why this stock is under so much pressure right now, because of, they didn't manage their capital properly and they couldn't pay their debts, and the stock is suffering a little bit. It is what it is, but as a business, it seems pretty good. I mean, their revenue is sitting at $54 million with a gross profit of almost 60%, and they are profitable of almost $10 million. That is very, very good. Yet the market doesn't care, and it is what it is. But I feel like iAnthus is underappreciated. But hey, that's my opinion. So yeah. Anyways, that is it for my video. Wow, I got like 2 more minutes to go. Well, we can look at the chart. It right now from a charting perspective, it looks bullish. The financials got released on the 9th. So, on the 9th, it got pumped. Oh my god. It got pumped to 25 cents. It went all the way up to, 25.5 cents. Pulled back to 23.5 cents, and then it got pumped again on Friday's close. I don't know what the stock price is going to do. It could just move sideways, or it could go back down to 20 cents. I don't know. I don't control the market. All I can do is, gamble that big money will pump the stock to the moon. Because I really don't think retail investors will. But, no, that's my opinion. Like, if a company like Aurora, made $10 million of profit, I think the stock would go up like $1 billion, But iAnthus is like, yeah, we'll pump it up 2 cents, 3 cents. It is what it is. But there's a lot of companies out there that would gain a huge footprint into the U.S. if they acquire iAnthus and just pays off the debt, like Sundial Growers, Tilray, Aurora, a lot of companies out there. Maybe even High Tide, big footprint, double their revenues from, $50 million to $100 million instantly. And to acquire them for $43.8 million, not very much money. But again, there's a lot of debt on their balance sheet, so iAnthus would High Tide can't really acquire a U.S. company anyways because it's still fairly illegal. So, no Canadian companies can touch iAnthus. Maybe a U.S. company like, I don't know, Green Thumb or Trulieve is late already, but Green Thumb or Planet 13 or, somebody. Huge footprint, big expansion. iAnthus has a pretty decent amount of growing space too, like growing facilities. So I don't know at the end of the day, but I think iAnthus is a good acquisition target. The only problem is the debt on the balance sheet. The debt's not even that bad, but they just need to find a way to pay it off. That's all that really matters at the end of the day. Anyways, thanks for watching. Don't forget to subscribe and have a great day. Bye.